One currency pair is all you need. In today's video, I'm going to show you how to make double-digit percentage returns every single week using our framework and the abundance of opportunity there is on just one currency pair. My name is Luke Burton, co-founder of Not Just a Trade, and I've been trading Euro USD only now for nearly 4 years, entering my higher time frame trade ideas on the 1 minute chart. And today I'm going to be sharing with you some of the insane knowledge I've gained over the years trading just one currency pair to show you how easy and simple trading really can be. Okay, so let's get into it. So I'm going to break down the trades that you can see on the screen now. First of all, what we found with trading so many pairs, because we did used to trade quite a lot of pairs with previous strategies, is that we would have obviously tons of pairs down the right hand side, sometimes even more than this. And I've seen quite a lot of people, they have like double or triple this amount of pairs and they're trying to look at every single pair and find setups on every single pair. But we're just, in reality, we're just flicking through trying to look for setups and entries that we can get involved in right now at the charts. It's like when you get onto the charts and you think, well, because I'm here, there has to be a setup for me or has to be a setup right now. So we'd be flicking through each pair, looking for a setup, looking for an entry now. And it just doesn't work because you don't really understand the pair. You don't really understand how it works just overall. And I just don't think it was a sustainable way to look at the markets. I think even if you're going to do more than just one pair, just having one or two that you're really focused on, you can make a ton of percentage. Like what I'm showing you on the screen right now is, potential 60% in the market's worth of opportunities. This is not uncommon to have this on a weekly basis or this amount of opportunity on a weekly basis. But what I do want to show you is that there's easier ways to make just as much money with less risk, higher win rates and more confidence and a simpler process. What we gain from watching one pair, and one of the biggest points is you know exactly how your pair moves. You gain that sixth sense on what price can do because you've seen it deliver in a similar way a few months ago. There's only so many ranges and trends that you can see before you know which one it is created for. When I look at ranges on EU now, I automatically know if they're created for reversals or continuations because I've just seen thousands of ranges now, be it trading on the minute chart. So I know how they behave, their characteristics, their behaviors, and what to look for. I've seen thousands and thousands of deliveries, watch candles moving up and down. I know the times that things are likely to happen. If the candle behaves in a certain way, then it's likely to move towards the last 15 seconds of the close. Just tiny details that give me that edge over the market. And these details make money. That's the kind of sixth sense that you want. And being focused on one pair, you're so in tune with how that pair moves that you can predict it before it even happens. And that's what makes money. So all of you that are looking for this setup, that setup, all of you that are looking for this setup, that setup, but really what you need is to be in tune so that you can predict what will happen before it happens. And you can look at the pair with such certainty that it fills you with confidence. And that's what enables you to put the trade on knowing it will play out. That you don't need like tons and tons of opportunities in a week to make such massive percentage. You can literally hit one or two winners for the week and you can hit double digit percentages by doing that. And that doesn't mean that you have to trade every single day as well. Some days are going to be no trading days and some days are, they're going to be hot and you want to be looking at the market. I know when to be patient and let price build and when to really be focused because price is setting up in my favor. So like I said, not every day is a trading day, but when it is a trading day, I know exactly what the setup looks like. I know when it's really stacked in my favor. And trading isn't necessarily about execution. Remember, the click of the button is just a second. So the rest of the time is just observation, patience, and focus to wait for that trade idea to come to you. I always say trading is 99% waiting around for the right setup and entry. I can come to my session in London or New York and know straight away if this session is one to sit out of or I want to be focused looking for an entry. If it's a sit out session, then I turn off my screen and I go and do something else confidently, knowing that I'm not missing out on anything. And I can come back later in the day and see if there's an opportunity tomorrow. And that's, what everyone wants from trading. And that's what trading really can be. It's, the beauty of our system is you can catch a trade early and decide if you want to continue for the day or go and do what you want. It offers the freedom for you to decide. There's no boss telling you what to do. You are the boss on the charts. So trading with our risk to rewards, you only need one good trade a day or even one good trade a week. And you can be finished for the week or the day. It can fit your style and your lifestyle. That's what you're doing this for, the lifestyle, the freedom and the choices. And if you're worried that you won't make enough percentage, then how does 10% a week sound, or 20% a week sound, or 30% a week sounds? These are very easily possible with just one pair. We've been doing this for years now, and our members are already experiencing these results. And I'm going to show you right now, using our framework, how that's possible. So let's start off with the narrative and just the understanding. I'm on the 15-minute chart because this is how we build our narratives overall. Prices reacted here out of a mitigation to the left. I mean, let's even go and see what that mitigation was so that we are all aware. And let's break down this. We looked at the week. So we're reacting here. So we're looking at the red line. Again, all these timeframes are very important to understand what price is doing, just in general. We do have an inside bar here, followed by initiation that broke a structure. So price is reacting out of this inside bar before price broke to the downside and caused this structure break. So we have our area that price is reacted out from now. Let's just move that forward. So now we can see that general area that price is reacting out from. So back to 15-minute. So we know that price is reacting out of this area, and as we can see overall, price is just ranging. We're just contained overall sideways in this area. So obviously if you're an NJT trader, you know that you're only looking for sells up in the edges. These are your best locations for selling opportunities. So when price gets up into here, we're selling high. So just to keep it nice and clean, we'll just get rid of this area because we know that price is now reacting out of this area. And as we can see, we've got a push up here that took out the liquidity, and then price broke to the downside and caused a structure break here. If you're in NJT, you know this is a strong high. This will be an area that we're looking out for price to come and react out from in the future. And we've got stacked liquidity just before that mitigation as well. So when we were looking at this overall, just before price even came into this session, this was an area overall that's a sell high location for a continuation to the downside. And we were looking at this as a range here, initiation, created this low, pullback, mitigation, and continuation, and then price targets this low for a continuation. Again, just playing that RIMC range where they stack their orders, they initiate price, it can do whatever it wants in that initiation, but at that point of mitigation, when we do get that mitigation, this is where we're looking for our trades, and we're playing continuation down into this low. So we had a very clear understanding of what price wanted to do even before we got into this area. So let's dive into the session. Obviously this happened during my session as well. Now the session times, you can literally pick whichever sessions that you want to trade. Like if you have work, for example, at 8 o'clock in the morning, then your session time could be 5 till 7, for example, a 2-hour time during the day, and there will be opportunities in that session. So it's like, it really doesn't matter what times that you pick. Over the week, you're gonna get opportunities in your session. I'm just picking out 2 sessions that fits my lifestyle. So I prefer to have a good sleep every night. So I prefer to get to the charts with a good sleep and not rush into the charts. So I get to the charts at 9 AM every day. So my session starts at 9 AM and my session finishes at 11 AM. So that's my window of opportunity, that if price is in a good location, then I'm going to be looking for a setup. And that was Monday morning. So let's go into the entry. So we have our trade idea, which we've already looked at before, which is we're playing that RIMC, we're playing out of that strong high, playing a continuation down into this low, and we're at the edge of the range just overall. So if I draw this range on this whole sideways range that we're in, we're selling high in this range overall. This is the midpoint of the range. These are the 2 edges. These are the buy low or sell high locations. So we're selling at the edge of this range. This was a great setup just overall. Now it's all down to entry because we have our understanding. We're reacting out of a higher time frame mitigation. We're in bearish trend overall to the downside. This is a strong high that price can react out from. We have liquidity before that mitigation, and we have liquidity down here that can be targeted in the form of equal lows if we get that continuation to the downside. So that's our trade idea. Now let's go into the actual entry, and every day we'll come on and we'll build our trade ideas from the higher time frame all the way down to the intraday 15-minute, and then we'll enter those based on the 1-minute chart or the 15-second. Okay, so now we're down onto the 1-minute chart, and as you can see, price has started to move up into this point of mitigation, and we're starting to slow down. we're starting to slow down and move sideways overall. Now for me, and the way that I enter, this is perfect. I like to enter when price is moving sideways at my point of mitigation, when we get those manipulations. And again, most of you guys that have taken this course, our course, know exactly why we're looking for sideways ranges and why we're looking for that manipulation in the ranges. When price moves above highs and lows, they're creating their orders in the market. So this gives an opportunity that when we do see that manipulation, we can get those trading opportunities. So for me, as soon as price took out this swing high that we had here on the minute chart, we're in a sideways range, we took out the swing high, we saw a reaction to the downside, and that's my entry there in the market. Now, obviously price stayed contained inside this sideways range, and after a sideways range, we always know that we get an initiation, whether that be a bullish or bearish initiation to the upside or to the downside. So for me, entering into a range, once we see that manipulation, means that I've entered at the top or the bottom of the range. Now, there's other ways to get involved in this same move. As we can see, I got involved in this move here for a short as a reaction, and that went on to hit a 1 to 10. Now, if you wasn't to take this and you was to still look at getting involved in this sideways range, which we'll box off now and have a look at. Now, after we got those mitigations, we see a structure break here. So we get a second lower high. So we know that we're in trend. A to B, pullback, mitigation, continuation, we break structure. Now we get the same thing here. We get sideways range, initiation that breaks structure, mitigation, continuation. Now, if you had played that, you could have got involved in, let's say, a continuation, stop above the high, because that would be the safest. And it would have run on into profit. Depending on your take profit, depends on whether you would have taken profit from this trade or not, or it would have just been a break even. Now, even if you didn't get involved in that trade, you still had opportunities to get involved in range, initiation, mitigation, continuation at a point of mitigation, which is exactly what we want to see. Again, for me, this is outside the session, but if it was in the session, again, I get my entry when price moves sideways and we run the high and move back in. So that was the first opportunity that hit a 1 to 10 for the week. That was the first trade of the week. That could even be your week done there. It can even be your week done. So it just depends on, what you want to do for the week, how you want to trade and how you want to be and how you want your lifestyle. And I know a lot of people want funding as well. Think of how easy it is going to be to get to that next level with good risk management and how much opportunity you'll see in the whole month. Passing challenges is literally stress-free with the risk to rewards that we have and the way that we trade. It's very easy to get funding overall. But here's the second trade. So now obviously we move from London session now into New York session, which for me starts at 2 o'clock. And again, we get the same opportunities. If you're looking at price in that structure, we've got that high, low, lower high, and lower low, and we break structure with that lower low as well. This is an inside bar on a different time frame, which we know to be a range, followed by an initiation. And this, if you don't know what an inside bar is, or you don't know how to identify them, we do also have a YouTube video which is about entries, and you can understand what inside bars are as well, so you can use them as part of your edge. And we get that range, initiation, pullback, mitigation, continuation. Now, again, this is right into the session as well. So we're looking for price to continue down into lower prices. And obviously our target is these equal lows that are here. And the overall target is the swing low down here. So we know that we're trading with the direction bearish. So all now we're doing is looking for entries. So as we see here, price moves up into that point of mitigation. Now, if you didn't want to take it as a reaction, you can wait for price to move sideways, initiate out, range, initiation, mitigation, and continuation, and you had a perfect opportunity there to get involved in that trade. FU wick took the liquidity before initiating to the downside, so we know that this is the entry point. It doesn't matter that price has already mitigated here. So some people might say that that's mitigation to mitigation. Now we're looking in this range. It doesn't matter at all. Price can react out the same OB or range multiple times if we're still in the same A to B. So this would be your potential second entry. And again, that's another trade that runs to a 1 to 10. So just showing you the potential opportunity for, to get involved in the market. That was another opportunity. So you potentially got, 2 opportunities already, if not 3 in the day, just playing out of this mitigation. Now for me, price had already broken to the downside by the time I got to the charts, and I wait for price to move sideways. So as we see, price is contained sideways here. We run the high, we get the mitigation, we get a reaction and my entry candle, and that's my trade for the short there. So it doesn't matter how you trade, whether you want to trade trends, which is like so, or you want to wait for price to move sideways and then wait for manipulation above or below the range and then look for your entry. These are both great entry techniques. I'm just showing you a variation of a few different ones. Or you can play RIMCs as continuations, range, initiation, mitigation, continuation, which was this entry here, which is another great opportunity that you could play. So that was another potential 10% for the day. So, you know, we're already sat at 10% and another 10%, 20% for the day already, just using our system. As we can see, we're still looking to play continuation, at least down into this low, and that's going to be our equal lows that price is targeting now. So we're still looking for sales, nothing's changed. And as we can see, price starts to slow down here and move sideways. For me, we don't get any manipulation in this range, so I couldn't get involved in any trades, but we did get range initiation that broke structure. We pulled back, and we pulled back very slow, so we had momentum rules on our side. We got that mitigation and continuation to the downside. So again, another opportunity to get involved in this move, playing the open of this sideways range here, stop above the high, being safe with a 3.6 pip stop, and obviously that then runs on to 8%, but eventually runs on to hit 10% as another trade. So you can see just in the market here, on Monday, the first day of the week, and we had great opportunities overall. There was potential 40% worth of opportunities if you took all of them. If you got all of them, great. If you only got one, that's still 10% in a day, which is double digits already at the start of the week. So that's Monday. So let's go back to the 15 and look at the next day. Let's just get rid of this to keep this nice and clean overall. So that's a potential double digit day, even before you've got into the next day. Now we can see that price has got a range between the candles here, and as we can see, we're looking at higher time frame now and trying to understand what price is doing. So we've got a whole sideways range here, so we know inside this sideways range we're going to be looking for our points of mitigation. We run below these lows, the swing low and the equal lows down here, and we've got sideways range. We've got initiation, again, that created this high. So when we get to the point of mitigation, this will become the next target for a continuation in an RIMC. Again, all of you guys in NJT know this already. So we're looking inside this range for our point of mitigation. We don't need to trade based off this point of mitigation. As you can see, we got a range between the candles that happened here. We don't need to take this as a reaction trade. We can wait for price to react. Like I would have this area here, I would also have this area down here marked on, and an area down here marked on. Now I'll have all these areas marked on, so when price gets here in the future, I'm not trying to take these every single reaction on the way down. This is just getting tapped in, tapped out. I'm going to wait for the reaction, see some intention in the market to the upside, and take a continuation of this momentum that I'm currently seeing. So Tuesday, again, we run down into that point of mitigation. We also stretch the leg, so we don't pull back into 50% at all. Again, this is a reversal signal because this is a higher time frame OB creation in the market. So again, we know that price is going to at least target this high. What has this mitigation also created? Equal highs or relative equal highs. So we know that that's liquidity for a future intention. And we have these relative equal highs that also becomes liquidity, which we know is targets to the upside. So at this point of mitigation, now this is Tuesday, we're only into the second day of the week. We have our narrative already that we're getting that mitigation. We've seen some aggression and speed, which is intention. And now we're just playing out that range, initiation, mitigation, continuation, which is bullish order flow delivery in the market. So again, for me in London, there wasn't anything to take here. We had to wait for that bounce and that reaction before we then got our intention for continuation in the market. But New York, as we can see, we got sideways range, initiation caused a structure break, pullback, mitigation, and continuation. So we got a potential opportunity here in New York. Let's dive in to see what the entries could be. Now, like I said, I don't trade every day. I don't need to trade every day because I trade with high risk to rewards. So for me, not every single day has to be a trading day. overall. So I didn't look at taking any trades on Tuesday, nothing set up that fit my entry rules. But if I was to get involved, this would be a great range initiation, mitigation, continuation play. Now, it's very difficult to find a point of interest in here. This is equal lows overall, and that's what price has reacted out from. So it would have been quite difficult to play this as a trade unless you had a really big stop underneath this low. And obviously we don't use big stops. And there wasn't really many other places overall. You could have played this sideways range here as a mitigation with your stop underneath this low. But overall for me, there wasn't any trades in this move. Price had reacted out and we've seen a move, and we haven't seen any other entries overall unless you're buying really high. So for me, no trading day on this one. And it's good to just observe and understand the flow of price and what price is doing, because now that Tuesday, even though we didn't get involved in any trades, that now gives us a narrative and a direction for Wednesday, because price is going to target this high first and then target these equal highs second. So we have very clear understanding on what price wants to do and where price wants to go overall. So let's mark both of these on. So we know that we're trading with a target of higher prices. So we move into Wednesday now, and price is moving with very clear intention. We're definitely in an initiation phase of price delivery because we're not getting any deep pullbacks. We're just getting shallow pullbacks and seeing continuations to the upside. So we know that we're going to be trading with that momentum. We have a target in mind, the previous high and the RIMC continuation high. So now again, let's dive into entry and see what we get. Wednesday. So again, just another thing to note about this Wednesday, this was FOMC day and interest rate decision day. So typically there's going to be some very volatile news on this day. So for me, I choose to sit out New York session. I don't want to get involved in any trades in New York, but there was some great opportunities overall in New York to play, just because I don't want to add risk to my account. Like I said, we make massive risk to rewards on, potentially on a daily basis and a weekly basis, double-digit returns. So you don't need to be at the charts and trade every day. And like I said, this is the thing. This is what we're here trading for. We don't need to trade every single day. But like I said, we have our narrative. Our narrative is higher prices, and now we're just looking for an entry in that direction. As we can see, we've got our A to Bs that keep breaking structures here. So we can follow this trend that we're currently in and look for a potential opportunity. So we've got A to B that caused a structure break. Now we're coming into my session. So it's literally just about looking for that point of interest, and we've got sideways range here. As we can see, if we look at our A to B, again, we want to be buying at discount, selling at premium. So let's put that on. And as we can see, this range that's being created here, followed by the initiation that broke structure, is at a discounted price. So we want to be buying low and selling high, buying at discount, selling at premium. So for me, this is a great entry point because we've got price moving sideways here. We run the low of the sideways range. I get my entry candle, and this is perfect for me. And as we see, we get that continuation because we take out the high. So we get range initiation, that creates the high. We pull back into that range mitigation, and the next target is the high for continuation. So again, for me, I don't move my stop until the continuation happens. So I got involved in this trade here, again for a long. We react back out the same area. So even if you didn't get involved in this trade, we can see that we have sideways range here, initiation within this whole A to B that we currently have. We pull back and we got that mitigation at the edge. So your stop could, even if you miss this trade, you could still get involved in the second one. Here, this whole sideways range. Sideways range, initiation, we broke structure here. So that shows intent in the market. That then creates that A to B, and you could have played that pullback continuation there to the upside. And again, whether you're taking that with a slightly bigger stop, I mean, 2.7 still small, or you could have played it at the 50%. You might have been taken out for break even here as well before price continued. But again, you still got another entry in the session anyway, when price did break that structure high, because we're just following the trend at this point. Those A to Bs that cause structure breaks. And as we see, we got another A to B. As long as this low isn't taken out, we're still in a bullish trend. So you see here, we create the low. A lot of people would be looking at this low here, but this is the lowest low. So this is the low that matters down here. So as long as this low doesn't break, we're still in that bullish trend. This is just creation of liquidity in order to create a new range to then see a continuation to the upside. So you would have still got another opportunity there to play that as a continuation. And again, that runs off for another 1 to 10. So in London session, you could have been at the charts for just over an hour and got into potentially 1, 2, and 3 opportunities to get involved in this move here to the upside. So again, plenty of opportunity, another double digit day. Even if you took a break even, you could have walked away with just a break even and come back the next day and built up your narrative for the next day. So just showing the opportunity in a day, you know, even if you didn't take any trades during this session and your session is earlier and you look at the session from 7 till 9 because you have work, you had plenty of opportunities to get involved in continuations here as well, playing RIMC, range, initiation, broke structure, pullback, mitigation, continuation. So there was plenty of opportunities to get involved in both of these trades here to the upside as well. So a lot of opportunity in this day overall. So that was Wednesday. Obviously then we had FOMC. What did FOMC do? It continued into higher prices. We took out the swing high again. So we had that RIMC, overall range, initiation, mitigation, continuation. Now we fulfilled that continuation there to the upside. So prices then seen continuation into higher prices. Now we're starting to react out of a new mitigation. So let's go back to the higher time frames and see where price is reacting out from. We have a whole sideways range here. Overall sideways range, initiation to the downside that broke structure. So we know that price needs to react out. If we look inside the candles, between the candles, there is again a new sideways range followed by initiation to the downside. So you could have this whole area here marked on as your location that price may react out from, but we're just refining that inside that point of mitigation to look for the range between the candles so that we can build a narrative of lower prices. So back to the 15, so we know that prices reacted out of that mitigation there. So we know that we're trading with the intention of lower prices right now because we're at a range, a sideways range between the candles. That's initiated to the downside, and now we're coming into that point of mitigation. So we have to see a reaction out of here now. That gives us an intention for lower prices. So now we have our narrative. All we're doing now is just looking to play continuations to the downside because we have our narrative of lower prices. We've also got liquidity built up here that price can now start to target. All these equal lows that price has now created here to the downside can now become a target. So let's dive into entry now on Thursday and see what we get and see what opportunities we get. So like I said again, if you're looking at the charts earlier, you might get some different opportunities compared to my session times. Now, overall in the session, if you looked at the session earlier, let's say from 7 till 9, for example, you could have played an A to B as price is pulling back and maybe even played a continuation to the downside. That may have equaled a break even, or you may not have got into many opportunities, but there was a trade right at the edge of the range here in this whole buy to sell, maybe a larger stop, so maybe you didn't get involved in that one. As coming into my session, we can see that the trend is very clearly to the downside, lower high, lower high, lower high. Like I said before, as long as these lower highs don't get taken out, we're still bearish. And that's following our higher time frame narrative of lower prices as well. Just overall on the higher time frame, if we're looking at our A to B and we're trying to think about trade location between this low and this high, this is our midpoint. So this is our premium prices up here. This is our discounted prices down here. So we want to be selling at premium, buying at discount, selling high and buying low overall. So we know we're at high prices, so we want to be looking for more sales. And as we can see in the session, we got that nice A to B. This candle took out liquidity as well, shows that manipulation here inside the candle, and we broke structure showing intention to the downside. So this would have been a great opportunity to take for a sell here with your stop above the high, nice and safe above the high, 2.3. And again, you would have potentially taken a 1 to 10 in the market here to the downside. as prices reacted out of this low. So again, another potential 1 to 10 opportunity. Even if you missed that trade and you wanted to wait for the reaction, you can take that as a momentum shift as well. Here, as long as you're selling at a premium price and you're trading price out of this buy to sell OB, you could have got in with an opportunity here to the downside as well. As a second potential opportunity, stop above the high, nice and safe. And again, depending on what your risk reward is, you could have taken profit or obviously would have got taken out for break even on that trade. So again, more opportunities in the market. So now we come into New York session. Let's just clear this up. So already in the market, it's Thursday and we've already seen an abundance of opportunities that you could have got involved in. Even if you hit a couple of break evens, Monday and Tuesday potentially gave you some great opportunities. Wednesday gave you some great opportunities playing the continuation of the momentum. And now Thursday, even if you took a break even, you can come back for New York or just be finished for the day and just be happy. And again, we're still playing with that same narrative of lower prices. And we come into the session now. So obviously we can see we've got range, initiation, mitigation, continuation. You're not going to take a trade here with a stop above here unless you're, a trader that likes to trade with massive stops. So you will be looking for and waiting for that nice continuation opportunity. And now for me, like I said, price has to move sideways before I look to get involved. As we can see, price moved sideways at this point. We run above the swing high and then I got my entry candle. So this for me was a great opportunity and a sell that I got involved in. Now, because we're at such high prices and because my stop loss was so small on this trade, I could get involved and take more profit than 10%. So depending on, again, where price is overall, we're targeting these lows and this was my target in mind. So I've taken a trade at a great location, top of the range, so I can take more profit on this trade at 15%. You can also still take this trade here after the reaction. So as you can see, after the reaction, let's just get rid of that. After the reaction out of this range, again, between the candles, range between the candles, this is also a whole large sideways range, initiation, mitigation, continuation. I look at ranges in between candles, as we can see here, range, initiation, mitigation, continuation. And if you wanted to take it after the reaction on the lower time frame, you got range, initiation, mitigation, continuation there as well, which you could have got into with a stop above the high, being safe. After we've seen that strong high being created in the market, the aggression showing the intention, and you could have got in with a potential 5 pip stop. And again, another 1 to 10 opportunity that you could have got into for that session. So even if you missed that trade or, that move, now you could look at the market again and, we're still targeting that low for continuation. And we've got a very clear sideways range here, initiation to the downside. Again, we've got inside bar, so we could play that as a mitigation, either as a reaction here to the downside, or you could wait for that momentum shift. And again, you can play that after the reaction with your stop in premium and still get involved in the great trades in opportunity with a safe enough stop. As we see here, it might have been a slightly bigger stop on this trade here with a 9 pip stop. You might have wanted to reduce that a little bit, but again, it still runs into profit and you can still take some great profit on that trade. So just to show you how much opportunity there is, you don't need to be in every single trade to be able to get into every single opportunity. But that's Thursday, so that's the next day. Now moving into Friday. So Friday was NFP day, which we'll just show you on here, non-farm payrolls. So overall, during the session, I'm not really looking to get involved in any trades until after the news has happened. Typically, you're going to see that the price will build up into the news and then see the reaction from the news, and then we can take continuations after. But overall, we can see that price has moved down. We're in a sideways range overall coming into the session. So again, we want to be looking at those good locations, sell high at the edges or buy low at the edges. And we want to stay away from the middle as much as possible. This is where you get tagged in, tagged out, but you'll get loads and loads of opportunities. So it's always pays to wait for the edges. So again, as we can see, we got doji candle followed by initiation that broke structure. That's given us our intention, range, initiation, mitigation, continuation into this low for continuation here. Now, another video that I've created I went through and as just before the news release, I was literally just predicting that this is going to be range, initiation, mitigation, continuation. So look out for that video. And that was obviously before it happened as well. Just using the concepts, it's not hard to understand the direction when you have the concepts and you have the understanding and you have processes in place. So again, we did get a reaction here. We're very clearly bearish overall because we've got our A to B and we're in a range for a continuation to the downside. And like I said, we're still following that narrative of price taking this low and seeing continuation out of this range. Initiation, pullback, mitigation, continuation. This low is going to become the first target. And we also had equal lows down here, which we know is a target for liquidity. And we've also got equal lows down here, which now becomes a target for liquidity as well. So it's really about understanding the full picture. When you're taking trades on the minute or the lower time frame, you really need to understand the direction that you're trading with. And once you have your direction, it's just about trading location, making sure you're selling high, and then looking for entry in that move. Obviously, because we're all watching the same currency pair, all our members are in the same trades at the same times, catching the same moves daily. They've built the skill and the framework, which we teach, and without us saying anything, they're posting the trades that they're in, and it's exactly the same trades as ours as well. So that's on our New York and London trading floors. So now we've got our narrative, range, initiation, mitigation, continuation. We can see that the news has happened. It's created that aggression and speed to the downside. So now again, for me, I just want to wait for price to slow down and start moving sideways. And then I can add on my framework and I can make sure I'm selling high or buying low if I'm going to buy. But obviously I've got a narrative of lower prices. So I'm expecting that this low is going to be taken for continuation now. And I'm trading any sells that I see on this way down that fit my process to play a continuation to the downside. So let's look at Friday's trading opportunities. Again, this is a great area to take trades for continuations to the downside, but typically you don't want to do that into a massive monster news event like NFP. It's very high risk to do that. So for me, I wait for that continuation after the news. And as we can see, price started to slow down and move sideways here overall. Everyone knows in NJT that, again, we're waiting for price to slow down before we're looking to get involved, because if price slows down and moves sideways and you're able to get in a sideways range, when price does initiate, you've got in the bigger move, and that's how we're getting those high risk to rewards in the market. So again, price starts slowing down and moving sideways overall. We have this again, the same doji candle that we were just looking at previously on the higher time frame that initiated and broke structure to the downside. We continued, price moved back up, it run the high, so we see that manipulation. Again, I'm still looking for sells, so I'm expecting that this range is going to hold for continuation. And again, price slows down into that mitigation here, runs the high, gives me an entry candle, and that's a continuation there to the downside. So, and that was a 1 to 15 for me for a continuation to the downside. Again, if you had held it to the low, you potentially have a 1 to 25. If you have a bigger stop and you took it on the reaction candle at 7 pips, you still would have hit a 1 to 10 regardless. I've just refined my entry enough so that I can take tighter stops and bigger risk to rewards. But overall in the week, you know, even if you was to only look at a trade and take one trade or only be in a couple of these winners, you know, you're up potentially 10, 20%. Let's say you took 5 or 6 losses, you're still up with massive profits at the end of the week. And it's all about the end of the month for as much as it is end of the week. Because we're all watching the same currency pair in our community, newer members make mistakes that our experienced members have made over and over again, and they can give our newer members the processes that they've learned, so they can learn much quicker than someone that's in a community with lots of currency pairs with lots of different focuses. And it's the same with us. We're able to pass on our knowledge to all of the members, and we're all able to see and go over the same price deliveries on the same currency pair and understand it with such clarity as well. We're a lot closer together as a community because we all just experienced the same market and the same market conditions. We have learned how to trade any market conditions and build processes that are repeatable in any market conditions, eradicating the fear that the market will ever change, because we can see all of these changes ahead of time and use our 3 different processes we have for these market conditions. So whether the market is trending, whether the market is ranging or whether the market is initiating higher or lower, we have processes to trade all three. And these are the only market conditions. So when people talk about the market changing, and the market does change, it only changes in these market conditions. We either trend, we range, or we're in an initiation phase in the market. Now, because we have a process, range, initiation, mitigation, continuation, this is a full price delivery cycle, which means if we break down these parts, range, initiation, trend, and initiation again, we can understand any market conditions on any currency pair at any time, and this gives us our edge in the market overall. To start your journey with us and join a small capped community of experienced traders, visit our website at notjustatrade.com. You can contact us on Instagram at notjusta.trade with any questions that you have. All our contact information will be in the description at the bottom of this video. Drop us a like and comment if you enjoyed the video. Day one or one day, it's your choice.